We are entering the first thematic track of the day, which is our financial track powered by Boston Consulting Group. And to open the session, our keynote speaker will be guiding the financial institutions to navigate through COVID-19 storms and how they can capture new opportunities amid challenging digital disruption. Ladies and gentlemen, here is Managing Director and Partner of Boston Consulting Group, Mr. Sumit Kumar.
Hi, good morning, everyone. Thank you for coming and joining on this session with us today. So I'm going to talk about how financial institutions are facing challenges in this COVID era and what will it take for us to really succeed post this era, right? And when I had this discussion with many executives from banking and insurance companies, it always reminds me of this very interesting thing which happened in the story of Lord of the Rings, right? Where Frodo and Gandalf talk about the fact that why is it happening now? Why is the world so difficult at this point of time? And that's what most of the bank executives and CEOs tell me, right? That why is it happening to us? Why is the world changing so dramatically? And what we tell to all of them and what we tell to ourselves is, look, we can't decide what happens to people at what point of time, right? That's all destiny and fate. In the end, we need to decide what we do with the time and how does it actually make the best for us, right? So that's kind of the whole setting that I want to talk today to you guys about how will the world be after COVID and what banks and financial institutions should do. So today I'm going to talk to you guys three things, right? So first talk a little bit about how is COVID really impacting our consumers and economy, and what does it mean in terms of some of the consumer trends, especially in the banking and the financial services industry. Second is what we believe could be winning plays in the new world going forward. And then finally talk a bit about what does it take for organizations to really execute these plays and win. So maybe first starting with, what's happening to the world today, right? So these are some numbers, and I'm sure many of you guys have seen some of this, right? But the fact is COVID has severely impacted our economy and our consumer, right? If you really look at the GDP forecast, they're expected to be somewhere between -3.5% to -5.5%. The unemployment rates are hitting at 4.6%. And with the most recent wave, we expect close to 25% of SMEs actually close down. And that's not really good for the economy, right? But look, the Malaysian consumer remains optimistic. I mean, in a recent survey that we actually did to the consumer, 35% of them feel that the economy will be better next year, right? And there is still hope in the economy. There is still hope in the consumer that things will change, which is kind of very good news for we as financial institutions, right? Now, if I really look at some of the trends that is actually impacting the new normal in Malaysia and what will happen post-COVID, some of them are very interesting and will have very huge implications to bank, right? So on general consumer trends, four things are really emerging out, right? The first thing is social distancing, right? We are learning to do business by ensuring we are distant to each other, right? And even when we meet, we want it to be very efficient, right? Be it an affluent banker who meets his RM, he needs to be efficient and to the point, or be it to someone who is selling contact lenses in a store, who needs to be very clear on what he's trying to sell and what he needs to offer to the customer. The second and the most important thing here is the time spent by consumers online. I mean, in the previous world, physical distribution and time spent on the physical infrastructure was super high. Today, we have more than 92% of consumers actually spending time online to search things before they buy. Now, that is tremendous. The amount of aggregate time spent by consumers online has gone up by 30 to 40%, and that completely presents a new opportunity for different industries to really tap their consumers. The third important thing is work from home, right? And work from home is not just something which is happening now. We believe it's going to be a norm going forward, right? For many industries. If you look at some of the US market, right? I mean, Facebook has already announced that it's going to continue work from home for a couple of years. Apple has done that. Also, lots of companies in Malaysia are looking for that and implementing that going forward, right? So that will have their own implications on how organizations actually work with different consumers. And finally, the spend, right? If you really look at the spend mix, people are going back to basics. People are spending on health. People are spending on good food. People are spending on nutrition. And the spending on more things which are what we call discretionary is going down. If you look in the banking world, what's happening there, right? A big move away from physical channel to digital channels. We've actually seen branch footfall drop dramatically and digital channels go up. The cashless payment is on a rise. If you really ask customers where are they going to actually spend their money on financial products, it's much more towards savings, insurance, and wealth management. Now, that's actually a very interesting play because that helps banks to think about more fee-based income. But it's also tough because if you have lower loans, your interest margins will go down and your income will go down, right? So banks really need to readjust and think, what do they do in this environment where loans are going to go down and there is much more demand on wealth and insurance-based products. And it's not just the consumer banking which is impacted. I mean, even on the business banking side, we see huge changes, right? There is a big restructuring in the demand and the risk profile of different industries are changing. While some industries are really doing well, others like oil and gas, recreation, travel have really been impacted, right? So as we think of lending to some of these companies, we really need to be careful. What's the perspective on different industries going forward? And hence, where do we really need to emphasize? And just to share some numbers for us, which are very, very relevant for us in the Malaysian context, right? We actually see 37% of consumers actually shifting from branch to digital. There's a big question that will this footfall ever come back, right? And at least our consumer surveys says majority of them are not going to come back, right? So you'll actually have lots and lots of branches with no people. 45% of people actually are new to online banking, right? So really people are adopting the whole online banking and digital financial services and getting used to it. And some of them are also older generation people who were not open to this before. If you really look at consumer loans, the retail loans, we actually see in the near term, there has to be a close to 30% cut in terms of what people are going to take up. Now, this will have huge impact on NIMs. 15% of consumers actually feel that they are going to actually spend much more on investments and insurance. Big opportunity for banks. The question is, how do we materialize on it, right? Because we are pretty much known in the industry to be product pushers, and we don't really advise customers. That's the perception, at least, the consumer has about different financial institutions, right? So really need to think through how do we win in this space, given the consumer is going to actually spend a lot more. If you look at the SME space, right, more than 25% of SMEs actually now prefer to interact digitally. They are very, very comfortable. In fact, they're looking for players who can give them loan remotely, who can actually manage their cash management remotely, right? So they themselves are very open to digital, right? And then the last point is delinquency and loans. I mean, the industry is going to see way higher delinquencies and loans, right? I mean, you've had moratoriums and you've not seen the real impact of it. But the reality is the delinquency and NPL numbers are going to go up. I mean, if you look at China, it went up to 4 times, right? So there will be a huge impact on that, and managing risk is going to be a big, big challenge in the coming times, right? Now, the way we think about this, right, and I think, we as BCG actually talk to a lot of companies and say, look, what do you do in this situation, right? And I think we see 2 types of companies which in this situation, right, and how they deal with it. While majority of companies actually see a drop in their margins and a drop in their sales, and that's 44% of them, and that's historical data. If you look at all historical downturns which have happened since 1986, this is the number, right? More than half the companies are not able to manage both growth in margin and sales. But there are companies, and 14% of them, which actually completely reinvent the business model and drive both sales and margins in tough times. And I think for us, what's important is, as organizations, how do we think of doing this? How do we become a part of that 14% and not a part of that 44% where there's a value destruction happening? And past has shown that companies have done like this, and we strongly believe that financial institutions have the ability to do this, and they can really succeed in this. Now, if you really think about this, that what does it take to be this top 14%, right? How do we really win in this market in times ahead, right? And I think as BCG, what we think is there are 5 elements here, and later I will go into detail of some of them, but it's really, you start with credit, right? Really start to how do you manage your risk and credit, and using data and analytics to do it, right? And I think most of you guys sitting here in the audience, I'm sure you're already doing it. In fact, this was the first thing which most of the banks and FIs took, in April last year. How do you really manage your credit? And in fact, I was talking to one of the CEOs, and he said, look, we have really tightened it. Our revenue is down, but our NPL will be managed. And the question I have for them is, have we actually tightened it too much? Are we really thinking about managing credit and growth? And I think in most cases, we have actually tightened credit way more than what is required. I think the second important lens here is the whole lens of cost, right? And I think after you've managed credit, there is a lens of cost. And again, a lot of banks are already, and FIs are already doing it, right? They're doing digitization, they're doing budget cuts. I think the big question that we have for the audience and for all of you is, how much of it are you actually doing in a structural manner, which is aligned with what the consumer of tomorrow is going to be? If the consumer in tomorrow is not going to come to the branches, is going to expect much more from banks and FIs in terms of how RMs interact with them, is going to expect much more digital enablement. Are we really thinking about that, or are we just cutting costs for the sake of it, right? And we'll look through some of the things on how we believe, FIs need to think about this, right? And then the third and the most important thing, and I think what I've heard with most of my clients is, look, this one is right now not a priority, right? I mean, people are very much busy in credit and cost, but people have forgotten revenue, right? And I think this is the best time for us to really think about, look, how do you leapfrog in terms of revenue acceleration? And there, how do you use data? How do you use ecosystems? How do you enable your sales team? How do you actually use so much of data which is floating around in the whole online world to really drive revenue, right? And that is how a lot of banks are not doing it. Most of it are very focused on credit and cost. While they're important, it's important to build a sustainable cost advantage and start really thinking about revenue. Today, I will talk in deep about three of these things, right? So one, I will talk about the whole revenue acceleration aspect of moving from product to solutions using value chains and ecosystems. I will also talk about how do you use analytics to drive hyper-personalization and really drive average product holding and price realization. And then I will also talk about, in terms of cost, how do you really think of the future distribution, which not only gives you cost, but also helps you win the customer, right? So let's go about this one by one, right? So let me talk a bit about the whole movement from product to the solution mindset. And how do you do that, right? So let me just explain you with a simple example, right? I mean, today if I go and ask a bank, how are you really being customer-centric? How are you really thinking about solutions? People will say, look, I'm actually creating mortgages for different segments of my customer. I have a mortgage for students. I may have a mortgage for young graduates. I may have a mortgage for affordable housing. But the reality is, we as consumers are not shopping for mortgage in the market. We're actually shopping for buying a home. And that shopping starts way earlier than when you actually think of the mortgage, right? When a student graduates, he starts to think, look, I want to buy a home 10 years later. How do I need to save for it? How much do I need to save? I want a home in this place. What will the price of home be 10 years later? Then when he's actually ready to actually buy, then he starts to search, where should I buy, right? Is this a good price? Am I actually paying too much? Who is the right real estate agent? What do I need to look in the house? How do I not get cheated by a developer, right? So many things go in. And then comes the whole fact of the mortgage. But life doesn't get over there, right? After you have done your mortgage process, then there is the whole point of, I need to move into my house. I need to settle down. I need to have a society to engage. Maybe rates are going down. I need to refinance. Maybe I need to actually use my house to actually get more money out of it. So the journey is pretty long and end to end. But most of the banks today are really focusing on the mortgage part, right? And that's where I think, banks and FIs are not seeing the opportunity. And we actually believe if you really need to stand out of the pack in the new normal, you need to really think out of the pack, right? Because look, in the end, if you take the example of home loan and lending, the market is going to be tougher, right? And if you're going to just compete on the mortgage product, which means you're competing on rate, it's not easy to win, right? You'll only end up cutting margins. But if you're really competing on the end-to-end home ownership proposition, that's where things will be different. And that's what I feel that FIs need to think. And be it a home solution, be it a mobility solution to get a car, be it a solution to help your dream to open your business, be it a solution to save, be it a solution to ensure your future, be it a solution to actually have a happy retirement, right? But really thinking through end-to-end is where we really want everyone to focus on and where we really want people to actually start building solutions for. Now, some banks and some FIs tell us, look, we're already doing it. We are doing amazing UI, UX. We're building very nice kind of interfaces, and we have some of that. If you look at Malaysia, lots of people are launching lots of new apps and people are claiming, oh, this is amazing. I have a great customer journey. It looks beautiful. It's easy. But the reality is the look and feel of the journey is just the tip of the iceberg. And where most FIs get it wrong is what lies beneath. You can make an amazing process where you can actually say, look, I'm applying for a credit card online. But the reality is, if after applying, you want the customer to send 5 documents, you have to have him call 7 times, you can't give him what he's approved for, and the whole process is very, very painful, it doesn't help. And that's why as you move from the whole product to solution, you need to completely fix the lower part of the iceberg, right? Your whole technology and data linkage, your agile delivery, your entire end-to-end process needs to be straight through. You need to really change the way your employees think and operate, right? And unless you do that, just a beautiful UI UX becomes stale in 3 months. I mean, I know a lot of you have played Pokemon before, right? Today's digital world is pretty much like gaming, One game becomes popular for 3 months and people forget it. And that's the reality of the industry going forward, right? If you are just someone who's going to just think about the front end, people will come to you, but people will forget you very soon. So we really need to think about the whole thing end to end and really fix both the front and back to really actually win in the space, right? And there is a lot of value in this. I mean, this is based on what we have seen other banks in the world do it, right? And it helps you in 5 dimensions. You will definitely see customer satisfaction go up, right, by 20 to 40 points. And we have seen that with our clients in Australia, in Europe, and even in Southeast Asia. Costs would go down by 15 to 25%. You actually develop capabilities, right? You're able to go to market quickly, your employees are happier, they feel that you're actually doing something better, and they feel, the job is way more exciting than it was yesterday. From a compliance perspective, the risk goes down because everything is digitized, automated, and system-driven. You're no longer dependent on hundreds of people to actually manage the whole compliance risk. And finally, on top of that, it comes with a top-line growth. So we really believe that if you actually harbor this journey of going from product to solutions, think end-to-end, there's a lot of benefit out there, right? Maybe I'll just go to the next example of whole distribution part, right? And this is something where it comes under the cost aspect, but it's very, very critical to actually make the consumers much more happy with us, right? And this picture just shows about what we feel the distribution of tomorrow will look like, right? On the left side, you see what the physical distribution will look like, right? So we believe the branches in future would actually be paperless, and it will be very much focused on advisory, really RM sitting out there and helping sell rather than doing services. And the physical ATM would look like something below. And this is a picture from an ATM in Indonesia for a bank where you can do pretty much everything. You can go and open an account, actually prints an ATM card, it prints a credit card. If you want to apply for a loan, let's say even a home loan, right, you can actually pretty much put your documents, scan it, and get everything done end to end, right? And if you're stuck, activate the video conference and talk to the customer relationship guy, right? So you really don't need a human being. It's all fully automated, it's all predictable, and you know exactly what's happening because it's all integrated, right? And for the more complex products, be it wealth management, be it SME loans, we believe the world will move much more towards a virtual distribution, right? You have someone on the video conference where you could really see the face, in a background which seems like a bank, with agents who can actually do multiple skills 24/7 with the right tools to handle what you're doing and really serve you, right? So you don't need to go to the branch. You don't need to actually call a call center, right? You have very skilled people sitting in front of you on a screen and really solving all your issues and problems, right? And selling you stuff. In fact, we did a customer survey to really understand, how do consumers feel about this? And really for even for the complex products like mortgage, wealth management, SME loan, close to 50% of consumers feel that, look, the world today is going to be much more either a hybrid model, which is face-to-face with RM with digital tools, or just RM with digital tools, right? So I think the dominance of face-to-face will go down, and we really need to build a hybrid model. And the reality is, if you look at institutions around us, we are very good in face-to-face. We are very good in self-service. But the hybrid model, nobody has mastered. If you really talk today to your banker, right, and you talk something to your RM, and then walk to the branch, see what happens. Your branch guy will never know what you talk to the RM, and vice versa. And that's what we call the hybrid model, where the physical, the digital, and the RM model all merge together, and you're all working in one seamless way. And I think how we feel the future of retail distribution in future will be 3 aspects, right? So really building your physical and virtual network, right? So as we showed through the whole physical, paperless, machine-based network, and the virtual network, which is much more a unified communication platform with video banking. On step 2, reinforced with the human factor, right? So really the RM will exist, but much more in a remote advisory with AI to support him. And then the third aspect is an orchestration, right? So that basically when you talk to a human or you actually look at a physical branch, it pretty much looks like very, very seamless, very orchestrated across channel, and it looks very, very, right product at right time and right servicing, right? So you don't feel like you're getting bounced off from one place to another place. And that's where we actually feel the power of the future distribution is going to be. And we really feel banks need to go after this, right? And this, again, it's a proven model. It's not that, it's something which will not deliver value. I mean, some banks have started to do it. Some FIs have started to do it. And you see many, many benefits, right? I mean, digital sales can go up by 20 to 40%. You see significant cost saving. In fact, one of the very interesting pilots we saw in some of the markets in Australia and Europe was people who actually started to do video banking, the people who tried it, 80% of them actually loved it so much that they just want to do that. And there is a very interesting study which was done by a US university, which said that close to 60% of human communication is based on body language when you look at the person's eyes, right? And hence, if a video banking can enable that, you really don't need so much of physical banking anymore, right? With the right person behind it, it's very much possible, right? And plus, you will actually see a huge improvement in your marketing ROI and your digital sales funnel will improve, right? So we really believe this is where the world will move, and this is how FIs need to think about from a distribution perspective. Now, shifting gears to the third part, right, which is the whole analytics for hyper-personalization, right? And I think now I want to spend like a couple of minutes to talk a little bit about the art of possible and how we think about different stages here, right? So I think majority of legacy banks, today are in what we call a nascent stage, right? They have some kind of business rule. For example, in this month, I want to push a mortgage, so every customer who walks in and who have balance above 50,000 ringgit in his bank account, push him a mortgage. Some of them even start to make some basic propensity model, which are univariate model which they are making, with some view on some of the variables. Most of these variables are refreshed once a month. So you really don't even know. Yesterday I called a call center and I complained, and today, an RM in the branch is saying, sir, why don't you actually buy a wealth product from me? Completely unaware that what happened yesterday. And most banks today are actually in this whole nascent stage, right? While a few of the banks have started to take lead and build some models, which we call in the evolving stage, where they're doing some kind of personalization, some kind of models are being built. They have micro-segmentation, which means, they will have a segment of people, who are high income, live in a particular area, have particular kind of spending habit, right? So it's segments of people, maybe 100,000 people, maybe 1 million people, right? And they build models for those segments. And in terms of data, maybe some of them is, some of them could be daily data, some of them could be weekly data. But the real differentiator in this space is what the TechFins or the digital banks of the world are doing, or, banks like Capital One, which actually invented analytics 10, 15 years back, right? Which is ingesting not just internal data, but external data. Pretty much real time, right? So, when you go to a Facebook, when you go to a LinkedIn, when you go to a different Shopee, right? I mean, based on information, which is both external and internal, they actually build features which are pretty much real time, run models, and offer things to customers on the channel of their choice. And if the customer doesn't take it, they use that feedback to readjust the model. So it's pretty much running all the time, adjusting all the time, pretty much using the entire power of infrastructure available today to hyper-personalize the experience. And that is where the money is. I mean, we've seen banks actually create more than 10% additional revenue through hyper-personalization. I mean, if you look at what Alibaba does in China, if you look at, what M-Bank did in Poland, if you look at some of the banks in India, what they're doing, if you look at what Capital One does in US, they're all in the space of, mature hyper-personalization and how they're really generating value out of it, right? And what lies at the core of this hyper-personalization? It's pretty much the customer DNA, right? 5 things as I talked about. One, basic customer demographic information. When was he born? Where does he live? So demographic information. Second is his information regarding internal data, right? What products he holds, what has he applied, what kind of transactions he's made. Third is external data, right? Where is he spending his time online? If there is what does his bureau look like? What is he doing with the competitor, right? How much is his wealth growing? Fourth is around insights which are generated from 1, 2, and 3, right? In terms of, is his balance going up, balance going down? I look like from my model says he's going to get married, he's going to have child. And then based on that, you throw out some kind of an offer. And then the fifth part comes, which is feedback, right? Which most of the organizations forget. What did he do when I sent an offer to him, right? I may have sent an offer, he did not accept it. Do I take that into account when I actually send in the next offer? I would tell you 99.99% of organizations don't do that. They keep sending the same guy the same thing. They never take the power of the information, which when you actually say, when a customer says no to something, right? And the last point I want to make on here, right? Look, I think it's very powerful to use analytics, right? And you can get a lot of value out of it. The reality is only 1 in 10 companies really make money out of analytics, right? And the reason for that is very, very simple. Everybody thinks analytics is about data, about technology, about algorithm, and that is what they do. But 70% of value is in business transformation. I can create the best model to create the best lead for my SME RM to go and sell wealth to the owner of the SME. But I have not fixed the KPI model if I don't have a way to track the leads, if I don't have a right product for him to come in. If I don't train the RM properly, this is not going to happen. And that's where the problem is. Most FIs focus on hiring the best quality of data scientists, fixing the technology and data, but they're not thinking about the business transformation. They're not thinking about the processes. And the outcome is very clear, right? People are not able to monetize value out of it. And that's something we want FIs to realize and really start rethinking about. Now, we talked about the 3 of the plays, right? And there are many, many more. And I think in the interest of time, maybe just shift gears to talk a little bit about how do you really execute this, right? And after my session, we'll have my colleague Ching Fong actually run through a panel session to go into more details on these enablements and get the view of the panel on that. But at the heart of it, we have 5 different elements which needs to come in place when you have to execute this, right? It's the new ways of working. It's bringing the live talent, it's setting up your data, it's setting up your technology and putting in place the partnerships, right? And it sounds easy, but doing all this is very, very difficult. And we'll see all of that in the subsequent session when we'll talk about the challenges. But if you do this, this is how it helps you win, right? And I want to end my session with this slide, right? And this, it was a very famous quote which we heard in April earlier of this year, right? Look, each of you guys really want to win in this market. You really want to go and defeat your next competitor, right? The reality is when the market is high, when things are good, it's very difficult to beat others, right? As you read here, it's a tough time. The market is not easy. It's not going to be easy for anyone out there, right? And this is the time for you to take charge. This is the time for you to really differentiate from your competition and win. Because in the end, in a sunny weather, you cannot overtake 15 cars. It can only happen when it's raining. So thank you a lot, audience, for listening me out, and have a great day.